they always say that 2% is their target, their inflation target. They kind of changed that. They're now calling it a goal. And to me, right now is a great time to start looking at gold and silver because I already know at least a year ahead where rates are going with a very high likelihood. The question is just how juicy is the opportunity and not whether or not there is an opportunity.
Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. What's up, YouTube? Silver Dragons here. Today I'm joined once again by Lior Gantz, the founder of Wealth Research Group. Lior, thank you so much for joining me.
Excited to be here.
Yeah, I want to get your take on the Fed meeting. Now, Jerome Powell just spoke. He basically said rates are going to stay where they're at, but we may have a few more rate hikes. What do you think about that? Do you think they're going to do another hike, or what's going on?
I think that if you look at what they've done so far, and if you look at the questions that were posed to them in the Q&A session, the following takeaways come out of this meeting. One, they will either raise one more time, likely in December, but maybe in the November. There is no October meeting. But the probabilities right now are that December is more likely than November. So they skip September, they might skip November, and then raise in December. But if they don't, that's it. So whatever the case may be, the market right now prices the probabilities of future rate hikes as if there will be one of 25 basis points, not just one rate hike, but a 25 basis point one. It will be in 2023. In 2024, we have no rate hikes expected. For me, the questions posed by the journalists, they really show you what the market cares about. So no questions about oil. Very interesting, right? Because oil is exploding in price at the pump. People are definitely seeing oil prices go up, but the Fed has conditioned the market that oil prices are, put it to the side. It may be 6 today, 4 tomorrow. It's very volatile. That's the kind of environment that they try to teach, that they try to educate the market that, hey, we have to exclude it because it's too volatile, right? So there weren't a lot of questions about that. And I thought that was very interesting because it looks like oil prices are going to stay high for a few more months at least. You have oil production cuts from Saudi Arabia and from Russia all the way to the end of the year, and Biden's administration, I don't want to say depleted, but it drained a lot of the strategic petroleum reserves, and they didn't replenish them. So they're at, I think, like a 40-year low. And they're certainly not going to buy a lot now because, in an election year, he doesn't want to be appearing as, siding with oil because he's appealing to the ESG voters. And secondly, because the price is very high. So I think that that creates a combination of higher oil prices for a few more months. The second question that didn't arise is, what about recession? The probabilities of a recession have really diminished from consensus. And I think it's more about, hey, are we going to have a soft landing where you're not going to even feel that we just hit the ground? Or is it going to be a soft, bumpy landing? But the consensus really is that the economy is much more robust than anticipated. And therefore, it's much more of managing the landing than whether or not we're going to crash or not. And I thought that was also very interesting, that the questions were more towards how are you managing the landing, because it looks like we are landing, right? A third thing that I thought was very interesting from the Q&A is no questions about Russia anymore. So that was very interesting. And something I didn't expect is there were a lot of questions about potential government shutdown. So that's something that the market is concerned about, a government shutdown and how that impacts salaries, consumption, etc. a few of the reporters asked about consumers and all the extra savings from the COVID era that are now gone, and the fact that consumers are actually using their credit cards to fund their lifestyle uh, to a degree. So I think that uh, both the market and the Fed they um, they see the U.S. economy as just chugging along and no need to worry. There weren't a lot of questions about housing, even though we all understand that housing is a very interesting topic. And there were no questions about China. So, you know, I really expected more hard questions, and we just didn't see a lot of hard questions in the Q&A. I think that you will see more in November if they do choose to skip. I think that if they say no, we're going to leave rates the same, I think the questions are going to start to be, well, hey, are you done? Like, have you had enough? And should should we start expecting cuts anytime soon? So let's see about that. The one big thing that I didn't see covered, and I just want to share with you because I did think it was very interesting, is they always say that 2% is their target, their inflation target. They kind of changed that. They're now calling it a goal, which is less of a conviction. Like we don't have to do it. It's a goal. It's not a target. And I thought that it was very interesting that they don't mind that it will take 3 more years to get there. So only in 2026. So they're not in a rush. Those things are really interesting because the question from one of the most astute reporters was, well, maybe we should, maybe that's not an appropriate goal. Maybe maybe the target should be 2.5%. So changing the inflation target is something that I think is interesting as well because 2% has been in our minds for so long, and now they want to, they're comfortable with with raising it.
Lior, let me ask you, how does this affect gold and silver prices? Because kind of the idea that we all had in our head was, well, they're going to have to start slashing rates, whether it be from the recession or they want to look good for the election, etc. But now that they're going to keep rates high until maybe the end of next year, how does this affect gold and silver?
To me, now that I know that the price of gold, the current price of gold, prices in that there might be one more rate hike left, and that's it. And that if prices rate cuts starting in June, it gives me a lot of confidence that it's easy now to forecast the future much more than before. If you remember, um, Jamie Dimon, when before they even raised rates at all, he said they're going to raise rates 9 times, but he meant nine quarter points. So rates are going to 225. Then somebody said they're going to 3, and he looked outrageous to say that they were going to 5.25 or even 550. That was unheard of. I did not hear anyone saying that before we started raising rates. And so that was a very unproven period. You just, how much is gold worth when they can raise rates from 0 to 525? So you're buying, hoping that something will happen your way. Now you kind of know exactly what's going to happen between now and next year. There will either be one more rate hike or not, and then June, maybe July, they will start cutting. So you have a really good idea of the future. And so, to me, I think that gold is creating a nice area here, and let us not forget where gold, has been coming from. In 2018, it was 1,200. Now it's almost 2,000. It's a 40% gain in the past 5 years exactly. And the reason I know that is because I made a big purchase in September 2018 when it was 1200. And if you look at the stock market and other assets, some of them are trading at those levels, at the levels that they were in 2018. So gold has performed very well, especially when you compare it to what you need to compare it to, which is cash alternatives. Um, and to me, right now is a great time to start looking at gold and silver, because I already know at least a year ahead where rates are going, with a very high likelihood for the Fed to do something weird, like start cutting right now and shake the whole thesis up, or to raise dramatically. It's a very low probability. So when you look at probabilities, you have a very high conviction probability that the price of gold right now, which already sees either one more rate hike or the end of rate hikes and a price cut starting in June, that is a very safe trade. And so to me, I think gold is likely going to maybe churn a little bit, but the uptrend continues for sure. It's very easy to see the future right now with gold, and obviously, once they start cutting rates, you will literally know, hey, we just started a cutting period, which is even going to increase the path forward and make it even more probable. The question now remains how high how inflation will be, because of course when you cut rates, but inflation goes down quickly, then the price of gold should not be that high. But if inflation remains very persistent while they are cutting, now you're creating a very juicy opportunity for gold. So the question is just how juicy is the opportunity, and not whether or not there is an opportunity.
So would you say right now for gold and silver both we're kind of near the low, and if people want to get a position, they should certainly do that before rates start getting cut? Is that kind of the idea?
The bottom, for me, was already in at the 1700s, and when it dropped to the 1600s, the high 1600s, that was the bottom, because then that was the most uncertainty of how high interest rates are going to go. Today, I think we're already past the bottom, but what's beautiful about it is it's past the bottom, but you know it's an uptrend. So while whoever didn't purchase ounces at 1700 um, and wagered that they will not go lower, well, now he can purchase it at 1900 to 2000, but he has a very high likelihood that the price is going a lot higher. So I think that from a risk reward perspective, you may have missed out on $200 worth of appreciation, but if in the meantime you did something good with your money, then right now is a much better risk reward profile.
As we wrap up here, Lior, if people want to get more information on what you're doing, where can they find that?
Wealthresearchgroup.com is the website. You can subscribe to the free newsletter. It goes out 3 times a week. That's literally the best way to kind of have something like this interview, but in written form. On the top menu, you can click on special reports. That will give you an array of these PDF downloads that we've put together on many topics, from the Middle East, Iran, gold, recession, CBDCs, and everything in between. And those are the best 2 ways.
Well, hey, Lior, as always, we really appreciate the time. Thank you so much for joining me, and we'll have to have you on again in the future.
Thank you.